The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources podcast.
So as we mentioned before we started this recording, we have a lot of good stuff that we talk about. It's off the air. It's kind of like when we were doing radio shows, waiting for the clock to tick up to the hour so we could get started. And we got done and saying, man, we should have been live at that time, but we're live right now as far as the new technology is concerned. Number of new headlines, articles have caught our attention with regard to electric vehicles and the green energy scenario that has been pushed upon us over the past several years.
Right.
And one point that wasn't covered in the article that you spotted, Perry, was that the fall of Tesla recently on the stock market threatens actually to move Tesla out of the top 10 holdings for the S&P 500. And part of that has been a shift in attitudes about how green is an EV. And
correct.
I don't remember if we were just kind of talking about this off the air in a prior session, and we didn't cover it this morning. But there was an article that I saw in my very random views on Facebook, which was a receipt for an individual who had, it wasn't an all-electric vehicle, it was a hybrid, and he had to replace his battery.
Right.
The battery on this now used car, I mean, it wasn't brand new, it was $28,000. Well, even at today's prices, you can buy a lot of gasoline for $28,000.
Correct. Not to mention a different vehicle if need be. So that's a whole nother car, 28,000. But that's one of the problems with the electric vehicles is those batteries. And another big problem is what you need to build those batteries with, which is going to require lots and lots of new mining. And with everyone taking a look at whether EVs, the conversion to EVs is going to be quite as quick and easy as envisioned, the miners are saying, hold on, we've got to stop this mining thing. These minerals are actually, the prices are collapsing. We can't afford to invest more money in trying to bring more mines online. We can't sell what we have now, and that's one of those problems. We talk about it often, not investing in the narrative that's out there, not looking at what sounds like a great idea, such as right now, lithium still. Everyone's like, well, if the whole world's going to go to electric vehicles, we need all those $28,000 batteries. We need lots of lithium. Well, investment grade lithium prices are down 60% this year, 60% down. So there's a huge disconnect between what you would think would be a great place to be investing and what is actually a really bad place to be right now.
Well, and it's not just lithium. Other precious metals or rare metals are required to build out a green electrical system, much less an EV. And so you have nickel, graphite, cobalt for a couple, and they're down 30%. When prices are falling that much, some of the mining companies are actually closing down mines, or at least reducing production, because it doesn't make any economic sense. The whole idea of getting this done is there's profit in it for somebody. And right now it looks like the major profit in it is all political. Even consumers are becoming skeptical about whether or not EVs are going to make sense for them. A recent survey that showed up on Bloomberg was that 62% of investors are not going to invest in Tesla, BYD, or other EV manufacturers. Only 38%, so that's a 2/3 for, 1/3 against the forecast for how beneficial EVs are going to be.
Right.
And part of that's just complicated by the fact that the entire investing industry has recognized that the move that was really generated a few years ago by Larry Fink at BlackRock, going to companies and saying, we're going to invest in you if your ESG policy, your environmental, social, and governmental policies make sense for controlling the climate crisis that is ahead of us. I mean, they
Correct.
plot hook, line, and sinker. Well, he did anyway, hook, line, and sinker with Al Gore. The world is coming to an end, and we are the ones who are going to burn it up. And it turns
Correct.
out that even the court has decided, the Supreme Court has said, no, you companies, you have a responsibility to your investors, not to the world. You have people investing money with you, and that's your fiduciary duty, is to take care of their money. And so this whole ESG investment policy is unwinding, and many mutual
Right. And Larry,
funds.
Larry Fink just forgot about that at BlackRock. They completely forgot about that. And, he said out loud in public, the issue is people need to be forced to go where we have to go, and we're going to do it. And so he became a real charging social mover, he thought, and lost sight of the fact that he's a money manager. They build funds to support Fortune 500 companies, and they stopped doing it, and it costs them dearly. It costs the companies money, and like you said, they had to unwind that and say, okay, we can't do that. Not even because we don't want to. It's because the dollars are leaving, and we're costing ourselves a lot of money here, and it's quite obvious that that's the direction this is going in, and we're on the wrong side. So we have to move because it's just a dollar and cents decision. They got a little ahead of themselves and decided that they were going to be, social architects, and it turned out, number one, they're not, and number two, that's not where we were heading anyway. So they got it wrong on both counts and are now backtracking as fast as they can.
And they were trying to basically get so far ahead they would end up controlling the market.
Sure,
We
they were going to be in charge.
several years ago, we were using BlackRock funds in the 401k accounts that we manage as
Right.
fiduciaries for the trustees. But when he took that stance, basically was blackmailing companies. You either adopt our ESG policy or we're going to
Right.
quit investing in your company stock. And companies started adapting. Well, now that's back rolling. But when when he made that decision, when he started blackmailing corporate officers, and we said this makes no sense, and it's a violation of fiduciary duty. And we went to all of the trustees in our plans and said, here's the problem, and we're going to change unless you absolutely want to stay with this. We can't justify it. And so every one of the trustees said, no, we have to do what's best for the employees.
Good. Yep.
And we eliminated all but one BlackRock fund, which we've not been able to find a suitable alternative for on a price return basis. But investors are figuring out that this kind of forced change in lifestyle, changes in the economy that's not ready to adapt. We don't have infrastructure. And we started off this podcast with we don't have mining capacity. And my goodness, we need copper. If we're going to rebuild our infrastructure for electricity service, we need an entire new national electricity transmission system. This won't hold it. We covered in another podcast recently the need for 40-foot power poles, because the power companies are anticipating that they're going to have to string more lines. So if they replace a pole, they want to put up a taller one that can handle more lines. That requires copper. We have an
lots of copper. Yeah.
insufficient supply of copper today. And in order to, and we haven't built a new copper mine, I think, in 10 years. There is one, I believe it's in Brazil, that is a potential mine, but it won't be in production for another 10 years. I mean, assuming that there's no problem with getting permits. But if you try to do that here in the United States, and we have a proposed mine for lithium in Nevada, but who knows how long that's going to take because you have to get your permits through the Environmental Protection Agency. You have to get them. There's an Indian reservation involved. You're going to have to get the Indian Nation to approve it. You have to
On
get the
board.
state to approve it. Then, and then if it gets approved, you're going to be facing years in court. So it's probably 20 years before we'd actually see full development of that. And what we
And
have with
even if you happen to luck out and you got to sidestep a lot of that bureaucracy, you've talked about it before on the podcast here, Don. It takes years to get up. If you identify a new ore in the ground, it takes years and years to have productive amounts being mined out of that. It takes a long time to bring a new mining project online and make it productive. So those are really long flow, and they're actually, like you said, Don, they're actually stopping that expansion right now because of the collapse in pricing. It doesn't make any sense to put a whole lot of their corporate money into an area where the prices are dropping so fast. So those are going to be more delays. And if at some point we do end up with the big EV conversion, we're gonna be way behind in all those metal productions, right down to we need to start digging. We need new mines, and it's going to take quite a while for that to catch up. And at this point, there's no way to avoid that delay.
Well, with the road that we're on currently, we won't have any coal to manufacture the steel that the cars make because EVs require more steel than a gasoline-powered vehicle the same size,
Right.
which means
Yep.
maybe we can make a deal with China to buy the coal that they import and bring it back over here. Or either that, or we'll just simply buy their steel. But it's another problem that simply ships jobs and production out of the United States to have government intervening and overlaying an EV demand to have conversion done by 2030. And in the state of California,
Right.
it's even earlier. It's where all the vehicles sold will be EVs. When people don't want them and the technology doesn't support universal usage.
You just can't use them yet. Yeah, it's going to be so hard. They're just way ahead of themselves with the timetable. There's zero chance that it can happen by 2030. But it's a great campaign point to be saying, well, that's what we're going and that's what we're going to do. And there's nothing we can't solve. And you love that kind of enthusiasm. But when you talk to the people involved in the industry, they just say categorically, well, no, that's an impossibility. We have too many things that we have to deal with to get there, and the time frame's just too short. Not to mention the demand's not there, even if we could. So it's one of those non-starters that they're still pushing as if it's going to happen no matter what, and it just simply can't. And that reality is beginning to sink in.
Well, and it's sinking in at the boardroom. Livent, Livent. That's actually, they're a lithium producer based in Philadelphia, but they own mining in Argentina. And because of this price collapse, they're not apparently shutting it down, but they're scaling back production. Albemarle is another one. That's the world's largest lithium producer, and they have concerns that there's no way to meet the demand that the governmental forecast is imposing upon society. It's
correct.
They just simply haven't done a cost-benefit analysis, which is pretty typical for the Democrats. They don't do that. They create or buy, I don't know which comes first, the story. They think that will work politically, so they promote the story. Investors get excited for a while, and then reality sets in, and all of a sudden the money says, I'm not too sure about this, and it starts backing
Pretty sure
out
that
the
won't
door.
work.
Yeah,
Yep.
that's right. So they Albemarle actually suspended operations on an Idaho cobalt mine. So times are tough here when it comes to the reality of making some of these what are now hopefully increasingly recognized as grandiose ideas.
Right.
Markets work. They may take time because there are problems that politicians and bureaucrats don't see, unaware of, or it doesn't match the story they want to sell. So as investors, be careful that you're not buying the story. The story affects Wall Street. We just mentioned BlackRock and Larry Fink. Larry Fink. I think I got it right there. But when he started his push, a lot of mutual funds, which were on the close to being closed down, just wrapped up because they didn't have enough money in them, they just relabeled themselves as ESG funds. Well, now that the money's leaving again, they're taking the ESG references that they've had on their websites off their websites because they realize it's not the selling point anymore. So if you're dealing with a financial advisor who says, I've got this great new idea for you, we brought this new product line, you should be looking at it. Well, you should be looking at it with a little bit of skepticism to figure out whether it's just one more story from Wall Street or if in fact it's a legitimate opportunity. If you have questions, you can always call us. Our phone number is here as we wrap up, and subscribe to our podcast. Thanks for taking time to view this.